All right, Roundtable Trading Thursdays with some live updates here. We didn't have very many setups in the middle of the week, and I want to point out some reasons why we did not get to these in our live session yesterday. So this will hopefully fill in some of the gaps of like, oh, hey, Mac, what's going on with some of those trades? So if you remember, we were talking about the euro. This is these are daily bars. This is some long-term support, if you will, right there. Let me zoom back out to give you a bit of a better view. Let me pause, actually, while I'm doing. All right, there we go. So what I mean by long-term support is that's the lowest low in like recent history. And of course, in the headlines, the euro's at blah, blah, blah year lows. And a lot is being made about the euro being at the lows. It's like everybody's talking about it. I have not turned on the news. I actually have not religiously watched the financial news in well over 7 years. Frankly, it's a lot of BS. I'm probably not going to be a featured guest on one of those shows, mostly because of my opinions of the people that show up there. So let's talk about like what's really going on here. Remember, the price goes down not because of some pinhead politician or because of some harebrained government policy. Price goes down because people are selling. Remember the legend of George Soros breaking the back of the Bank of England. The Bank of England was directly intervening with their currency. They were buying currency. They were selling gold. They were doing everything they thought they should do to stop price going down. Well, that's because nobody was thinking about how price really goes down. If nobody else in the world except the Bank of England wants to buy pounds, price is going down, baby. The bank simply does not have enough money. Now, yes, they could print all that money, but then you're like Zimbabwe, where you're starting to issue 100 trillion notes because your currency is so inflated. It's just not a good idea. Okay, so the euro's going down because people are selling. That's really all that we need to be concerned about. Since this was the prior support, remember in a couple of sessions we were talking about we were looking for price to hold up here at support, and obviously it didn't. So let's go ahead and zoom in. I'll give you the reason why I'm not calling for some kind of buy in the euro here, and it has to do with the fundamental reality of big bars. Anytime you get a relatively big bar, and remember relative means compare the bar in question. So if we're saying, hey, is that a big bar? Look 3 bars prior. If it's bigger than any of these 3, relatively speaking, it's a big bar. So we're getting this big bar as price is coming down to this support area. That tells me, hey, we need to sit back and wait. So what are we waiting for? And actually, if you remember, we did take a short position here. We did have, I talked about taking profits right there, and then a re-entry. Re-entries, if you were looking at it, could come down here, which I'll get to those in a second. But the reason why I didn't talk about any of this was because we had these big bars coming into support. We had a retest of this prior support zone right there. And then we had the continuation, okay? But it's this bar right there that caused me to wait. We've got a range on the bar that's pretty big. Okay, it's not like really teeny like that one or like that one. But more importantly, price closed about where it opened. You see, traditional candlestick theory would say, oh, well, that's confusion. Look, people, that's not confusion. That's simply buyers and sellers pretty much equally matched. Right? There's really no such thing as confusion in the marketplace, so to speak. The people who trade big money, they're not like really confused as in, oh, what do we do? What am I supposed to do? Oh, I'll throw $200 million at the market and hopefully we'll get something done. That's not the way it works. Now, confusion is better translated into lack of direction. This is a direction. This is a direction. This is not. Okay, so it's not like people are confused. They're looking for direction. Since we are not the ones who create price, we need to sit back and say, okay, since the big players don't have a definite direction, we need to step back. I'm not all that convinced that this down move here today is really much of anything. So let's go down to the 1 hour bar. and we'll talk about some of the entry possibilities that we had set up. Remember, we talked about this a couple of days ago. So if you're wondering how you could have got in it or maybe why you missed it, it's all right in this box. Okay, so we only need to focus there. Let me use a better box. Now, I'm not saying box in the sense of well, anyway, let's just focus on this area. So we've got the big bars in the background here and here. We have support, prior support, like right in this area here. Price moves up. I say, you know what, let's take some profits because we don't know what's going to happen. So we really just need to take some dollars off of the table. So we do that. Bang. Then what we have to do is wait for our sweet spot in order to re-enter the trade. All right, so let's check out some of the times. Here's 5 a.m. So we had a shot right back here as price was hooking back up. So if we're looking at taking profits off the table back here, this is on the 9th. We had another opportunity on the 10th for an entry. This is early New York time, 4 and 5 a.m. We had another shot over here. This is 3, 4, 5, 6, 7, all the way up into 7 a.m. We had some additional slots over here, 9 and 10 a.m. New York time. So let's talk about what we're looking for. Very simply put, we have the direction already. The direction is down. We have the resistance area. Remember, resistance is formed in a couple of ways. Resistance is either formed by a prior area of buying that has been breached, right? Price breaches to the downside, or we have a prior high that price is returning to. Two different concepts. This type of resistance that we are focusing on here, which is right about there, is the concept here is, hey, these people who were once value buyers, in the marketplace they turn into sellers. So people who were buying at this price now turn into sellers. It's just how the market works. You got to get with the program. So here's the thinking. All right, so when I'm looking at this trade, I'm thinking to myself, okay, these prior buyers might turn into sellers. So how do I arrange my life? Well, I can be aggressive and sell right when price gets in there. Remember, aggressive traders get stopped out more often, so that means I need to take a small stop. This trade did not have a very good stop. If I sell against these highs, or if I sell at the bottom of the support area, which was right about here, my stop has got to be way back there. Option number 2 is to go with a 3-bar reversal. A 3-bar reversal means I'm selling right about there, but again, my stop is back there and my profit target's here. Not a very good trade. So while at first glance it looks like we had a trade forming up here, there really was nothing to do. So don't be heartbroken that you didn't get in there. Now, I'm telling you, if you get this in your blood, your trading will improve. You will stop taking crappy trades. You'll stop getting stopped out. And the road to getting there is just realizing that you want to make money. And when you sit down at your trading desk, you're thinking, I want to make money, and that's causing you to do stupid stuff. I don't care if you run $300 million or if you run $3,000, the same thing happens. Right? I know traders who have $50, $60 million trading accounts who do the same thing. All right, so let's continue. Price comes up the next day. Boom, 4 o'clock in the morning. It's making a run. There's really nothing here that gives me, an indication, oh, look, there was a trade there. We look at that and say, oh, well, sure, I would have taken a trade. Yeah, BS. There's nothing there. The real magic is right here. We're inside of the sweet spot. We have prior resistance. Price comes up. We get 3 bars, and let's focus in on those 3 bars. Now, this is real-time trading. This is as if you're sitting down at your desk. So what you have to do ahead of time is the thinking necessary to get you in this trade. And the thinking is, in the background, I've got this resistance over here. I've got these sellers here and here. Price is coming back up, comes down at this point on this very bar, this hourly bar. You should be thinking, hey, sellers are coming into the market again. Price comes up, can't make it. That's your clue. I need to be a seller in here. As price comes back up, that's where you're selling. That's the aggressive trade. This is the Fibonacci trade. Boom, right there. Stop here, target here, and actually let me zoom back out. You've got 2 targets. Target 1 is here. The next target is on the Fibonacci extension of this move, which is, actually, no, sorry, right about there. All right, so that's the thinking that goes into that type of trade. The real question is, number one, do I have sellers already in the market today? Sellers back here don't matter if you're day trading. You need sellers today. The clue that you had sellers on this day was that price in the early London session could not continue going up, starts going down, starts coming back up. You are trading in anticipation of that. But without the sellers on that day, forget about it. You're just taking a wild guess. Or you're taking a trade over here and hoping that your 25 or 30 pip stop holds, which, by the way, it's not gonna. Why? Because the professionals know that retail traders like small stops. They know you want to take a 25 or 30 pip stop. They know you don't have the money in your account to take a 50 pip stop. So they're going to come and get you. That's just the reason why it happens. All right, so that's the euro. Let's talk about the Aussie yen as well. Remember, we took a long trade on this, popped it up to here. Now we're coming back down. This aggressive bar here is actually giving me the signal we need to prep for some more buying in here. So be prepared for that. It's Thursday. I'm not all that happy about taking a trade on this on a Friday, mostly because this is a yen type of trade. And when we're, Friday in the day, it's just a short session. I just really don't like it. But I want to keep this on your radar. We've got the British pound as well. Let me get to that. Daily bars. Remember, we talked about this already. We took some buys in this mess in here, and then we said, all right, price is going to come back down to here. Well, look, they pulled the sneak attack on that. Where do we think price is going? Right back down here to the prior buyers en masse. So we've got a big support zone down here. If you are looking for a buy on the British pound, be prepared for a very fast move against you like we're seeing today. Let me zoom in again. So here's your fast move down here, another fast move down. All of these fast moves are to get price back down to pools of buyers. We've got a small pool of buyers here that we did talk about. So we might get price popping up. I would not look, if I were you, for that to go much of anywhere. I'm rather looking for 53.50 down to 52.50, about 100 pip range.